Good day. Tea with Travis. Today is December 1st, Monday, and hopefully you had an awesome Thanksgiving holiday and weekend, a long weekend, and you're as busy as you wanted to be or as lazy as you wanted to be, whichever suits you. For those of you that took on Black Friday with vengeance and went shopping through all the mess, which I certainly don't do, the early numbers came out and said that there was a 7% increase from last year's spending, which sounds good, but the reality is, and how it's been negated so far this morning in trading, is that so many of those sales that were made yesterday or on Friday were based on businesses closing, slashed prices, just crazy discounts to get people into the stores to even spend at all. A lot of people speculated it being a terrible spending month, or probably one of the worst spending Black Fridays in a long time, or probably 30, 40 years. And so some of the prices that were slashed were basically at cost. And so even though there's a 7% increase, they're concerned that this isn't sustainable. Businesses don't make profit selling things at cost. And so the positive, or the silver lining in that really wasn't as good as it sounded. Another big crash this morning, the reason the Dow is down 430 points right now is the global manufacturing numbers came out, hit the wires, which in futures and trading this morning, but this weekend across the globe. When there's a global basically meltdown in manufacturing in China and different parts of the world that we import and export to, this is why the global economy is so important right now, is because it's not just our economy that's having trouble. When China has the lowest manufacturing numbers in the history of them tracking it based on growth, it's pretty daunting, and it kills other people's markets. And so Japan's market, the EU in Britain and Europe, as well as our market this morning, just did not like the numbers at all. And so the Dow's down 430. Mortgage-backed securities, surprisingly, are not bouncing higher on a positive note for rates, because usually there's that flight to safety like we've talked about in the past, where when the Dow is really plummeting, there's a reason to fly to safety, which is in treasuries and in mortgage-backed securities. Treasuries are bounced up. 10-year note today, though, it's the lowest yield since 1955, and so it's pretty interesting to see that just the numbers that are coming out are astounding. And so often when we do financial planning and management of people's assets and mortgage and so on, we look at technical factors and past history, and we always try to convince our clients not to go off of speculation and concern and fear, because we have to go off of things what we've known in the past. Well, what we've known in the past is not ringing true right now. It's unprecedented times, and so it's hard to really project what's going to happen. Now, oil prices, fortunately, last week in the short trading days, stocks were kind of on a little bit of a rally throughout the week, but there were slow short trading days due to the holiday. But oil was on an upward swing, meaning prices were going up in oil, but they're back down this morning with this news. They're under $50 a barrel again, so we should continue to see prices below $2 at the pumps, as you've already have seen. We might see them even down to $1.75 here come Christmas. Outside of that, the Fed Reserve chairman, as well as Ben Bernanke, as well as some of the other members, are speaking at a financial summit today in Dallas, and they're speaking right now. Actually, in about 4 minutes they start speaking. And with that, the traders are really sitting on their hands right now, waiting to see some positive news or some sort of information coming out of their speech. One big thing they're watching for is, are the Feds going to cut down to 0%, the Fed funds rate here on December 16th when they meet again? The speculation is they're going to cut another quarter at least, but are they going to cut it truly down to a 0% Fed funds rate, which would bring prime down to 3% and no yield on the Fed funds rate? So again, just unprecedented times for this to happen. Outside of that, Friday's a big day with jobs numbers, unemployment numbers. Some other reports are trickling in this week, but right now it's kind of doom and gloom in the market. They're expecting the worst in all these reports. So unless there's some real earth-shattering numbers coming out, like I said, the global manufacturing numbers coming out this morning was pretty daunting. So outside of that, I think mortgage rates are wonderful, though. I priced out a deal this morning for a client that had good credit scores. 5.125 was their rate with APR of less than 5.4. So, I mean, if you want to pay a discount point, even I priced another deal that they won under 5%. It was 4.875 with not too many fees, with an APR just over 5. So, when you got rates busting 5% for a 30-year mortgage, that's pretty unbelievable times. So that's the good news. Oil prices are down, like I said. So there are some good news in this, and we should be thankful. And like I mentioned last week, attitude or gratitude is the lifter of attitude. So be grateful for the things we do have right now. We are much better off in so many different societies, even as dark as it seems right now. So I look forward to serving you. Have a great week and be blessed.